This video is brought to you by
YouTube influencer Kevin Paffrath. What up?
And that's because now I'm $4 million in margin, so I have to sponsor myself. Hey everyone, me Kevin here. Yes, obviously check out the programs linked down below with that price expiring on October 29th for the programs on building your wealth. But I've got to talk about this. Why am I now $4 million in margin? Well, folks, for a variety of reasons, but the biggest of all, it has to do with taxes. Take a look at this, folks. It is pretty painful, but I had the cash set aside, and I'll tell you what I did with the cash. I had the cash set aside, but things U-turned, and I had to pay 3.0367, always 337, million dollars in taxes to the good old the and the S. But the good news is I don't live in a dumb state like California where I'd have to pay these crazy income taxes to the state as well. Wait. Actually, I do. And I had to pay about $1,081,000 to the franchise tax board. Thanks a lot. I divided it into $1 million payment and then the $81,000 payment that I sent as well. But anyway, yeah. So now I did send this back in May. So, but anyway, I did go into about $4 million of margin nonetheless, about 3.3 from those Fed taxes, and I kind of had the money set aside. I had 5.5 set aside, but the problem is I literally blew everything on stocks and crypto. Throughout September and October, well, mostly just the first few days of October, it was pretty much all September, I went on this crazy long-term buy frenzy for stocks and things that were on sale, like ADA, $25,000, Hut 8, $50,000, Ethereum, $25K, ADA, $50K, ADA, $50K again, Matterport, this is a Matterport trade that I did. It was a longer buy sell. Anyway, sold some leftover Peloton that I had there as well. But then Enphase, bought more Enphase shares. That's 250, what is that? 250 times 162, $40,000. Affirm, 49.5K. Another 7.7K of Affirm. Then added 100K of Enphase. Added 13,300 shares of Cardano. Actually, a little bit higher than where it is now. 1,000 shares of Affirm at 107. Added 300 shares of Enphase. That's at 153. It's like 173 right now. Another 100K on Enphase on a further dip. Then look at this, adding Enphase, 200K, 100K Hippo, 100K Lemonade, 50K DocuSign, Ethereum, ADA, BTC. I mean, you could just tell I'm going nuts shopping over here. Look at this. 400K Goog, 300K Enphase, AMD 50K. I mean, I went shopping. 100K Affirm, 29 BTC, 420 shares of Enphase. You've got Ethereum, Matterport, Palantir, Affirm again. Yeah. Let's just say things went a little nutso here. And those are just long trades. This is in addition to obviously just trades that I do as well. Like for example, selling puts on Lucid, or over here closing some options right here, like closing calls on HUD 8, or closing options on SoFi, or sold calls on Affirm, covered calls on Tesla. Oh my gosh, I'm so glad I closed my covered calls on Tesla. I'd be screwed if I had not closed my covered calls on Tesla right now. So good thing I closed those. But anyway, the point is, folks, I am now in a place where I'm gonna have to figure out how to pay down my margin again, because now I'm about 3.5 to 4 in on margin. Some of it's over at M1 Finance, a little bit over at Webull, and then most of it's over at JP Morgan Chase, which is nice because their credit facility is only like 1.49% interest. But still, I'm now going to have to switch a little bit into this mode where if prices keep going up and we get this end of the year rally, I'm probably going to have to close out some call options that I have profitably, fortunately. Things are turning very profitable right now. It's nuts. And I'll probably have to consider trimming some of my winners just to make sure I reduce my margin. Now, I did also go into margin because I bought 2 properties for a total of about $1.8 million. So in fairness, a good chunk of that is real estate. Then, of course, the taxes, federal taxes, California taxes, and the crazy shopping spree I went on for stocks. So I'm really glad I bought the dip, but I'm back on margin. I just want to be transparent about that. I'm not very happy about that because I don't like margin, but I am very happy about when I bought because the timing has been perfect. But now we got to work together on getting this margin down. And usually what I recommend as strategies for getting margin down is you can do this, but it's risky because you could end up deeper in margin, is you could sell puts. Another option is selling calls against positions that you want to trim. So for example, if you made really big tendies on certain stocks and you're thinking, all right, well, I want to get out of margin, so I'm going to sell some of these shares. Instead of just selling the shares, do a 45-day contract on covered calls for that position. That way, if the market falls, your covered call kind of hedges you. Obviously not financial advice. You're not going to be completely hedged depending on what you do. It's up to you, right? But selling covered calls, again, could be very interesting on things that you want to trim, on things that have run nicely, things where you're like, this is borrowed money. I should just get rid of this and get rid of my margin. Do a 45-day sold call. Ideally, look for things with elevated volatility because if you have elevated volatility in the stock, you're going to be able to take advantage of generally a better premium. Of course, you could look at open interest as well, but typically when you see that volatility up, you're going to get a nice extra premium. So that might mean it's time to sell some calls on things like Enphase. Maybe you do some out of the monies, right? Affirm. I hate to say it, but maybe even just a little bit of Tesla. Maybe even NEO a little bit. I did a little bit too much buying is the problem. Now, I don't want to close out any of these companies, and I'm super bullish on all these companies. But they've done so well over the last really 2 weeks here that I got to be realistic. If the market does rotate to the downside, I'd rather be hedged with covered calls. And that way, if the market does rotate down, I have that's going to gain in value and allows me to minimize some of the impact of my margin. Then once I finish fixing up these 2 properties, I got to do some cash out refinances, pay off that margin again. So my hope is that by January or my birthday, I'm completely out of margin again. But it's going to take refinancing those properties. It's going to take some big covered call moves. So I'll be working on that probably next week, probably Monday through Friday, working on trying to get my covered call strategy going. Hopefully, all of next week is just a nice green week because that's going to make getting rid of this margin a lot easier. I'm going to feel a whole lot better about doing covered calls on some of the things that I just need to reduce my exposure to. So these are some of the thoughts I have. I don't love doing covered calls, but the fact that now I had to go into margin because of these real estate purchases, because of the taxation, and now the market's running, the market's rallying. You know what? The timing works out. It's just the perfect time to do it. It all comes after I bought the dip big anyway, so may as well take advantage of some of the tendies right now. Maybe even, this is another consideration, maybe even extinguish some positions that I'm down on that I'm not as optimistic about anymore. Like, I'm not sure about this one because it's sold off quite a bit, but what's up with Pinterest? What's up with Redfin? What's up with Coinbase, right? Some of these other companies. Has my position shifted on them at all? I don't know. But there'll be something that I'll definitely look into potentially trimming on a little bit, so that way if there's some losses, I could use those losses to offset gains on other things like options or just straight shares that I have, and get rid of this margin as soon as possible. Now, just for perspective, about $4 million of margin on about a $23.8 million portfolio is about 17% margin. I never, ever like to exceed 20%, but quite frankly, I like being at 0%. So that way, when there's a buy the dip opportunity, I can go shopping. That is, of course, the kind of stuff that I talk about in the Stocks and Psychology of Money program. And if you like my insights and the way I think about things, or the way I look at the market, perspectives, things I teach, take a look at those programs. Link down below, many on real estate investing, property management. You've got being an agent, making YouTube content, and of course, Stocks, Psychology of Money, options, and crypto. All linked down below. Thanks so much for watching, and folks, we'll see you in the next one. Thanks again. Bye.
Like and subscribe. Bye.